Hi, and welcome to this week's Property Insider video, where Dr. Andrew Wilson takes a very deep dive into the property data, not just the last week's one, but for the last month. He's also going to give you his forecast of what's going to happen to property values between now and the end of the year. I think you'll be interested in that. But he's also going to reveal something that has changed significantly in our property markets. Not a total surprise for those on the ground, but very different to what the media is telling. So lots of information for you in a slightly longer session this week. If you enjoy keeping up to date with property, subscribe to our YouTube channel and click the little bell icon so we can keep you informed for each new show. What a week it's been in property. There's been a palpable change in mood on the ground, and in a moment we're going to dig into the data to see what's really going on. And it's really quite different to what many negative headlines in the media keeps throwing at us. Still, last week there was news that lending criteria will be loosened, allowing home buyers and property investors to borrow more. Then on Tuesday night, the Treasurer delivered his budget to rebuild our economy. And they're now extending the bridge that they built to get us across to the other side. And more than that, they're building a path to recovery, to create more jobs, to give businesses incentives to invest and to employ. So lots to discuss this week with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Andrew, I'm looking forward to your data update this week. Welcome.
Thanks very much, Michael. Yes, we've got some very interesting data, and I guess maybe we could say we're first to reveal a significant change in the market down in Melbourne, which is good news for Melburnians and good news for the property market.
Well, I'm looking forward to seeing that. You've been delivering a consistent message since COVID-19 hit. But what I've noticed over the last few weeks is a change in sentiment in many of the other economists, and actually now by the media, which is finally starting to catch on with the changes in their headlines. In the last week, I've suddenly seen headlines like "Housing bears face extinction as forecast turn bullish." Houses emerge stronger over September as Sydney and Melbourne decline softens. Huge signs of the property market heading up again. House prices bounced in September. So the data has been showing that for a while. You've been mentioning that for a while. I guess the media has finally caught up. So, Andrew, let's have a look at your data and what's really going on in the property markets.
Yes, Michael, what a week it's been in the property market. Let's have a quick look at the key stats. We'll also have a look, Michael, at the month ending September. So weekend auction markets, which we start with. Another solid result for most auction markets, Michael, last weekend. Sydney's clearance rate continuing to settle above 70%. That's clearly in favour of sellers. If we continue to see those results, we'll see certainly upward pressure on prices. Auction numbers, of course. Now, let's remember it was a long weekend everywhere except Melbourne last weekend, Michael. So numbers were down in terms of auction listings, but Sydney listings were well above, again, the same weekend last year, which, of course, was also a public holiday. And that's a lot to do, as we've discussed, with these new online auction listings, which are perhaps previously were private sales, but have been morphed into this online auction mechanism. But numbers are very strong for a long weekend there in Sydney, clearance rates up. Other capitals also still doing quite strongly, solid to strong. Canberra market has been particularly strong this year, Michael. Now, Melbourne, we actually were able to run a clearance rate in Melbourne on the weekend. Numbers still low, you can see, compared to the previous same weekend last year, but numbers are now on the rise, auction numbers, and that sort of reflects what we're going to look at shortly in terms of new listings. So even though numbers are small in Melbourne, I think we could just about call the bottom of the auction market in Melbourne last weekend, and we would expect to see numbers rise, and interesting to see how clearance rates respond to that. The Sydney trend, as I mentioned, is still holding above 70%, and the trend is upwards there. Top regions were to the north of Sydney on the weekend. Michael, Northern Beaches and Northwest, and the Central Coast and the Inner West, always popular. And they all had clearance rates above 80% on the weekend. So strong results there in those regions. A top price unit, a nice 3-bedroom unit there in Coogee, Michael, with ocean views, 4.3 million. And if we look at Melbourne, we can see we've now got a clearance rate active again, and that trend rising from the depths of a fortnight ago. But we need to watch that going forward. There should be some volatility as we get more properties into the market in Melbourne. And as we've said, we can see that bottoming out of auction numbers, which has been more of a reliable statistic over the past month when we have had volatile clearance rates because of low numbers. But we can see now the number of auctions is starting to rise in Melbourne. I expect that to continue. We can see the national new listings data climbed over the past week, Michael. That was a real blip in the series. If we look at the same period last year, comparing the daily index, we can see now we're tracking with new listing numbers higher than where they were a year ago, Michael. But here was the big change, Michael. We saw a 178% increase in new listings over the past week compared to the previous week in the Melbourne market. Other markets rising, Brisbane and Sydney, along with their trend of previous months. But Melbourne really came out of the blue, shot out of the blue. New listings surged into the market last week. And of course, look, that reflects that pent-up demand that we've had during the shutdown period there. And agents are now bringing properties into the market. And we must, of course, acknowledge that this is coming from quite a low base, but it was certainly a sign of the turn of the market in Melbourne. And we can see that the relativity index for Melbourne over the week, let's remember this is over the week, was the highest of all the capital city markets. And that's, as I said, coming from a very low base. And you can see that comparison to the week before with Melbourne and Sydney. And that's setting at Sydney at 100. So 26% more listings came in to the Melbourne market last week, new listings compared to Sydney. And we can see the regions there, just to put in a regional slide for new listings, Michael. And you can see that's quite an even spread on geographical locations, the regions in Melbourne for new listings. So really most of the markets, but particularly the outer suburban markets, were part of that new listing spree last week in Melbourne. And we can see total listings, and this is the total number of listings, Michael. This isn't new listings. This is the total number of properties for sale currently in each of the capital cities. And we can see there was an 8.5% increase in total listings. And of course, that's mainly due to those new listings coming into the marketplace. Other new listings or total listings data was quite steady for most of the capitals over the past week. And that's telling us that there's now nearly 10% more properties being available for buyers in the Melbourne market compared to the previous week. If we look at the relative position, we can see there that Sydney still has the most total listings of all the capital city markets, around about 12% higher than Melbourne. And of course, we know that Melbourne is still in a recovery mode. There'll be more listings coming in, total listings, but certainly that position has changed over the past week, as you can see, and this is for total listings. So that's listings, Michael. Sellers are certainly now coming back into the market in Melbourne. We'll still, of course, have significant lockdown issues in Melbourne going forward, at least for the next couple of months. But the market's showing that it's resilient and just was waiting for that opportunity to be able to inspect in a live environment. And that's brought those new listings into the market. So new sales in Sydney still rising, quite a robust and steady underlying result. We can also see now a big rise in new sales as well, Michael. Again, these are newly reported sales over the past week. We can see that has also had a bump upwards over the past week. So obviously the easing of those shutdown restrictions, Michael, has brought buyers and sellers back into the market, and not just sellers, but also buyers. And Brisbane is the strongest of all the capital city markets now in terms of rising local numbers of new sales being reported into the marketplace. We can see the index there, the change over the past week. Melbourne new sales up by 44%, reasonably steady in the other markets there that have been climbing over the past couple of months. But again, similar to new listings, new sales, a big surge in over the past week, Michael, in Melbourne. And we can see there that the relativity index has risen as well compared to Sydney. Still well below, of course, new sales, the volume of new sales compared to Sydney. But Melbourne now was a significant catch up in that, and some way to go, of course, and we expect that until the shutdown conditions do ease significantly more than they have been eased so far. But it just shows that has been a significant impediment to the property market, as we know. And once those shutdown conditions are eased, that buyers and sellers come back into the market, as we know occurred in the other capital city markets when their shutdown restrictions were eased. We can see Melbourne listings and sales weekly change there. If we put that all together, we can see new listings in Melbourne were up 178%, New sales were up 46.6%, total listings up 8.5%, and Melbourne versus Sydney's total listings are still down by 12%, as we said before, Michael. So still 12% fewer total listings in Melbourne compared to Sydney, but those other key metrics were certainly very positive for the Melbourne market going forward last week. So that's the market, Michael, the weekly market update. Let's have a quick look at the economy. The share market has picked up slightly over the last week. This is the first post-budget measure. We can see the share market has just started to find a higher level there, but still quite steady over the past couple of months. The Australian dollar, of course, fell last week as we discussed on the predictions, which were supposed to be pretty strong, that the Reserve Bank was going to cut interest rates for October. Maybe they're going to save that up for the usual Melbourne Cup interest rate move. But we did see the dollar start to pick up again after it absorbed that prediction of an interest rate cut over October. Interesting, our latest data, Michael, has been retail sales. If we look at retail sales, they actually fell. The monthly retail sales, which were released last week, actually fell over August compared to July. But if you look back to, and these are seasonally adjusted retail sales, if you look back to, I guess, the pre-coronavirus retail sales environment, and that is actually February, because we've got to remember that there was a huge boost in retail sales over March because of that panic buying that came into the market. And of course, then we had the shutdowns, which compensated for the overbuying or the over retail sales panic buying in March. And then, of course, we fell back over April. But retail sales, Michael, have been quite strong since then. So it's not a question of catching up with compensating for that panic buying in that pre-coronavirus panic buying. We actually are still tracking quite high, as you can see, in relation to the pre-coronavirus levels. So I think that shows that spending is actually continuing quite strongly, retail spending. And perhaps there's a lot in the online retail market, that online spending is boosting overall retail sales, but it certainly remains, Michael, well ahead of the levels it was pre-coronavirus. And that's good news for the economy. And no surprise when we look at that monthly retail sales, which was down 4% nationally, that it really was dragged down by Victoria. And we know that during the lockdown period, people are actually physically restricted from purchasing, and that pulls retail sales down. So I think there was some pretty positive news going forward, Michael, in terms of retail sales. And I think with the budget providing tax cuts and lots of incentives, and of course the government encouraging people to spend their tax cuts, that's going to continue what's been a very positive trend in retail sales over the past 3 months. So as we mentioned, the budget, Michael, the extension of the first home buyer deposit scheme has been confirmed. Extra 10,000 places will be available now. Of course, that allows first home buyers that are eligible to purchase a property with as little as a 5% deposit. And the usual mortgage insurance premium is covered by the Commonwealth in that respect, which is a big saving for those that are on those low deposit loans. Price thresholds have also been raised up towards 800,000 in Melbourne, nearly $1 million in Sydney. So lots more choices available for first home buyers. Of course, you've got to remember that they would, given there are income limits on those that are eligible there will be some restrictions on their capacity to borrow up to $1 million. It'll depend on their incomes, of course, and that may mean they'd have to have a higher deposit level as well. But it is still restricted to new homes. So the plan behind this, of course, for the government is to stimulate employment through extra development of new properties. And this will really be all about new detached dwellings, new houses, rather than apartments, although the apartment market should benefit, particularly those that are new and that are currently for sale. Just some bits and pieces out of the budget, Michael. Those tax cuts have now been brought forward, so immediate PAYE tax cuts, increased support for small business and large business with the extension of the full write-off for new assets in businesses now through to another year, and JobKeeper support will remain. And there were many other bits and pieces. The government really did throw the kitchen sink at the economy, Michael, and we would expect them to do that. And we now await, with fingers crossed, of course, that we can maintain our positive coronavirus environment and move ahead with an economic recovery. Now, we've just got quickly, Michael, a monthly market report. I would just look at the national auction markets over the month. Really, there was nothing to report in Melbourne, so we'll just stick with Sydney. You can see clearance rates there rose over the month. We can also see volumes of properties listed for auction also rose. and the median auction price was increased over August as well. Northern Beaches was the top performing region for Sydney, Michael, in terms of auctions, 77.7% clearance rate over September. Castle Hill, Randwick and Lane Cove were the top suburbs for auction sales over September, Michael. And we saw that beautiful property in Vaucluse as the top sale at 24.6 million, which I believe was $10 million over the reserve, Michael. So that's a pretty fair result, isn't it, for the seller? We have the vacancy rates as usual over September, Michael. There are clear trends in vacancy rates for that unit market in Sydney and Melbourne. We've seen vacancy rates continue to rise, now well above 7% in Melbourne. Of course, we know that is that CBD market that's driving those high numbers of vacancies. Sydney's obviously still a market with high vacancies in suburban units. If we look elsewhere, Michael, it's interesting to see what a difference a year makes in that Darwin market. Also Perth, we've seen vacancy rates falling quite sharply in Perth and Darwin. Perth, as we saw in the latest migration data, has had a big surge in population, in migration up to March. I think that's driving demand for rental properties. And in Darwin, we've seen strong growth in interstate migration, Michael. I think particularly Melburnians, anecdotally, we're hearing looking to get into Queensland via Darwin, and that's putting downward pressure on vacancy rates, which now are spectacularly lower than where they were a year ago in Darwin. Rents, not surprisingly, we're seeing a weakness in unit rents, Michael, in Melbourne and Sydney. Unit rents down 2.4% over the month. That's likely to continue in Melbourne, also down in Sydney, 1% over the month. House rents are remaining quite steady, however. We are still seeing reasonable demand for house rentals, but certainly in a suburban units in Melbourne and Sydney, reflecting those higher vacancy rates with falling rentals. Prices were again quite steady for house prices, Michael, just down a fraction in Sydney. I think other data models had a similar result, down by just 0.2% over the month. Melbourne also reasonably flat over the month, and just hasn't really been that shakeout we've been expecting in house prices as a result of the coronavirus. Unit prices, again, reasonably steady as well over the month. Some of those smaller markets, such as Adelaide, recorded falls, but of course, there's very small numbers of units are sold in that market, so those results can tend to be volatile. And we'll just finish off, Michael, by looking at the top 10 sales for each of the capital cities. I won't go through them there. Mostly outer suburban areas in Sydney are the top sellers, those new estate destinations. And we can see inner suburban units are still finding buyers in Sydney, DY, the top there over the month. Very small numbers of sales in Melbourne, not surprisingly, Michael, and most of them, again, are outer suburban areas. However, Frankston South and Frankston were amongst the top 10 there, and Glenroy tending to be a bit more established residential areas, but low numbers. And of course, very low numbers on those apartment sales, but still favouring those inner suburban areas. But when we look at Queensland, this is Greater Brisbane. Top sales in Greater Brisbane, we can see, particularly in units, that the Gold Coast is dominating that. So lots of sales of units happening on the Gold Coast. And houses, similarly, that northern part of the Gold Coast continues to find significant numbers of buyers. And we just have to look at those numbers, Michael, and compare them with Melbourne to see what a difference the market environment currently is. And this is my housing market barometer, just for those that have forgotten. And this is the forecast for where markets will end up this year. I think we are on track to meet these particular targets, and they won't be too far out, I believe, by the end of the year. So that's a very long update today, Michael, of the latest data showing us that Melbourne's looking now to join the rest of Australia in recovery in terms of housing markets and eventual house prices as well. So thanks for that, Michael.
Wow, lots of data there, Andrew. Thank you very much. As I looked through what the top selling suburbs were and the price ranges, it brought out something that we've discussed before, that in general, the more established suburbs in our capital cities are holding steady. People aren't selling up. They don't need to. And it's really the lower end of the market and the apartments that are selling. And that must eventually affect some of the way people are reporting median prices.
That's right, Michael. There's obviously a bigger volume of properties in those outer, the further out you go. And that means there are more buyers who have the capacity, because their prices are lower. There's a higher volume of buyers as well. But I do think one of the interesting things, Michael, will be the opportunity in the next couple of months once gathers strength, the Melbourne recovery. And of course, we're very early days into it now, and a lot depends on continuing easing restrictions in coronavirus. And fingers crossed that's going to happen over the next month or two. But what I suggest is that we will start to see people thinking, well, this is a pretty good time to buy property. And if anything, interest rates will fall going forward. And certainly the prospects of an increase are as remote as they've ever been. So with record low interest rates, perhaps another cut to come, the early stages of a revival, we may see increased buyer activity, particularly, Michael, as you suggested, in those outer suburban areas in Melbourne, where interesting, of course, as we saw, that's where most of the new listings have come into the market.
Sure. So thank you. That's a great overview of what's happening. Of course, before anyone makes an important decision of where you buy, where you sell, have a look more granularly to see what's happening in your local areas. But I guess I haven't seen more positive signs since coronavirus started. We're pointing in the right direction.
Yes, we are, Michael. And I think it shows again that confidence is only really a short-term factor in housing market dynamics. Housing markets are driven by more fundamental drivers, and particularly that very strong aspiration for home ownership and investment. And that's what the government's tapping into by extending the first home buyer deposit scheme. And that will be a success, as it has been over the past year since it was first introduced in the last budget, Michael. But we have a lot of work ahead of us in terms of the economy. We shouldn't trivialise that. It's going to be a tough couple of years. Treasury is forecasting growth in the next financial year of over 4%, but a lot of that is dependent on two things. Firstly, a vaccine, and secondly, control of the virus and not having any more shutdowns occur as we've had this year. So we need to be really hopeful that that will occur, Michael, and then we'll really move into recovery phase.
Definitely there, some of the underlying assumptions of the budget forecast. I think the other one is that people are actually going to spend. In other words, the money that's going into the hands of consumers, that they're going to spend it rather than save it. And similarly, that businesses are going to use those incentives to firstly spend, but secondly, to employ people. A few assumptions there. They seem to make sense. We're just going to have to see how it pans out. Look forward to our chat again next week, Andrew.
Thank you very much, Michael.